Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's talk about what happened today and what we can expect moving forward as we continue the bounce from the 180 lows. And so if you enjoy, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for $3 a month. Access to my thoughts, posts, updates, etc. Intraday, I post options flow all the time as well, which is a paid service. Link down below if you're interested, 25% off. But let's just jump right into it. Tesla closing the day actually in the green, up 0.35% on the day, closing out 191 point, pretty much 0.6 per share, which is going to be pretty decent, especially compared to the market, which, especially tech, that see a, underperformance today, especially with Apple leading the charge to the downside, down almost 2%, and QQQ being down almost 0.7%. So once again, a second day in a row of an outperformance relative to the market, which is nice to see. Now, let's talk about it, right? So ignore the price you see up here because this is kind of taking into consideration some of this aftermarket effects from, earnings. For instance, AMD down 2%, right? We have Google down about 4%. We have Microsoft pretty much flat. Amazon down because I don't know why. I'm not even sure why Amazon's down. It just is because I guess why not? Amazon reports on Thursday. Anyway, we're here for Tesla. So let's talk about Tesla. What does this mean, right? So there's a few things that I want to talk about here. A few things that are important. Before we get into the chart, though, I do want to talk about options flow very quickly for a specific reason. There's a lot of options flow, a lot of bullish actually options flow that did flow in today. Now, there's a lot. Obviously, I'm not going to talk about every single one. The majority of it was definitely more bullish and bearish. You can see up here, pretty much 21 million call flow versus about a 6 million put flow. That's number one. Now, like I said, a lot of bullish flow, right? Usually you want to look for things that are unusual, right? Things that are highlighted in this purple. So what I'm going to do is this. Because it's highlighted in purple, that implies it's unusual for, either because the strike is like super far out or because it's an expiration is, very, very soon, or both. In this case, there's a lot of both. So I switched the filter to just this coming Friday of expiration. And one thing you'll notice is pretty much towards the end of the day, first of all, there was a lot of flow today, a lot of calls coming in that most of them were actually out of the money, about 195 or 200 calls, which is, nice to see. And the most important part, arguably, is the fact that they're for this Friday. Now you can make an argument that some of these closed out, maybe they, entered when Tesla was kind of, doing that just post lunch drop, and they bought in, took that little bit of a ride up and exited. That is a possibility. However, there is another one that came in pretty interestingly, pretty much very close to the actual close of the market at about 3:20 p.m. today. And Tesla pretty much didn't move since then, right? It was pretty much going sideways, about 0.5-ish% on the day since that call got bought. But the interesting thing is the fact that it is a ever so slightly out of the money call, 192.5 strike call ask, but it is 800K premium, which is obviously, that's a lot of money, right? And of course, like I said, it is for this Friday. So I did see, like I said, a lot of calls coming in for this Friday. 195, 200 strike were the main ones that I saw. And even without that, there was still a lot of overall bullish flow on Tesla coming in. Just in general, when I filter about 100K plus, definitely a lot more bullish and bearish. You can see a lot of bullishness came in the morning, right? And all in all, people seem to be expecting Tesla to move higher ultimately. So we'll see if that actually comes up or ends up being true or not. Don't forget, tomorrow we also have FOMC, which can potentially dictate whether or not we continue this rally or we go down even further. I'll talk about both scenarios that I foresee happening moving forward. So the thing that's important today is the fact that, we had a gap up, obviously got rejected by, the level we've been talking about, right? The level that we bounced out of over here, pretty much like 195, roughly, we'll say. Very, very crucial level, right? For many reasons. Number one, like I said, it is just going to be an area of resistance, right? This was supposed to be an area of massive support. Unfortunately, we gapped down right below it, and now we're coming back up into it, which naturally acting as a resistance. We're still substantially oversold. The MACD is still extremely oversold. Stochastic is still scraping the bottom of the barrel, though you can see the blue line has convincingly flipped bullish over the red line, which is nice to see. That's potential promise over there. We'll see if that, ends up holding true or not. But you also have this volume profile on the right. You can see, the volume over here on the right sticks out pretty much right as we enter that 195 to 200 level. And that's exactly where we're so far finding some rejection. And as if that was enough, it's also where the rejection of this downtrend yellow line that has started pretty much ever since this downtrend started back at 265. Can you imagine that? We were at 265 a month ago, and now we're at 190. That is pretty that's a pretty substantial drop that fast. That is crazy. But nonetheless, here we are. So that is the downtrend that we're also in, right? In order to break above this downtrend today would have been pretty much around 198, 199, close to 200, right? Tomorrow, as you can see, it's a steep downtrend. The level to break above it is going to continue going down and down and down, right? So for instance, tomorrow, the level to break above it, to really, actually break above this downtrend is about 196-ish, give or take, right? Which is just barely entering, this overall resistance area like I talked about. So that's going to be important to break. And if it's not tomorrow, the day after, it's going to be all the way down at 193, maybe slightly 194. So, the level is going to keep dropping to break. And I do think that once we break above this downtrend, once we break above this volume profile, and especially once we break above that 195 to 200 level, those are the three, key levels that we need to break above. I think we're gap filling this earnings gap pretty quickly. I really do. That's my personal belief. That's assuming, of course, things go well, FOMC goes well, etc., and the market reacts, accordingly, we'll say. Now, that's kind of the main thing I'm looking at. Now, the question, of course, then comes, okay, well, let's say it does play. Let's say we do break this downtrend, all right? Because there's another thing I want to show you really quickly here. It's going to be the 5-day moving average. This is a very short-term moving average, right? This just dictates, short-term momentum, right? It's more of like not really a day trader, but more of like a, up to 1 week swing trader momentum, if that makes sense. Just again, short-term momentum. Now you can see, ever since this downtrend began, right, we closed below it, and then we pretty much have been closing below. We got rejected by it several times over here, got rejected several times. We were never able to close a candle above this 5-day moving average ever, pretty much ever since we initially closed below it and the downtrend has begun. Not one candle, we went above it, but we never closed above it. Not one candle has closed above it until today. Today, we not only closed above it, but we closed pretty much just barely above it, but above it nonetheless. So that's potentially a promising sign. So there are some signs showcasing that the move up can potentially be here, right? Again, we have the call flow coming in. People are expecting Tesla to go, up at least above 195 by this Friday. To 200. We'll see if that ends up being true or not, of course, right? We have, of course, again, above the 5-day moving average. We are gapping up above the this massive earnings post earnings fall down, or like gap down, if you will, which is good to see, right? We have the Harami candlestick pattern where we had a massive fall. We had a pretty much quote unquote inside day. Remember I talked about this. Would have been better if it was green, but nonetheless it's still technically there. And then the way to kind of confirm this is to have essentially this exact day that we had the following day, which is a nice beautiful white or green candlestick moving pretty much upwards, breaking all these candles, trading days, if you will. So this pretty much, these three candles was phenomenal. This is exactly what you want to see for a reversal. When a gap up came down, gap fills, so we're not leaving gaps unfilled. And on top of that, we are, of course, also holding above it on a red market day. So those are the good signs, right? Now, like I said, just to break above those resistance levels, and I think we're, looking pretty solid here for the most part. Tesla selling off a little bit here post-market, but I think that's, again, it's on low volume. It shouldn't matter too much. We'll see how the market responds in the morning. But now let's talk about the downside. Let's say maybe FOMC doesn't go so well, or let's say maybe the tech earnings that we're seeing right now, like for instance today, Microsoft, AMD, for instance, reported, Google, right? Let's say maybe that doesn't go so well. Let's say things take a turn for maybe the worse a little bit, right? What happens there? What can I expect to see on the downside, assuming there is still some more downside potential? And in my opinion, it's a real possibility. And the possibility is as follows. I think the downside will be one of two things. Either we come back down and double bottom, essentially at 180, or we do go down slightly below and barely enter the 170s, like 177-ish, touch the bottom of this overall channel, which we still technically haven't. And I think from there, what we do is we overall set up a bullish divergence on the daily RSI. And from there, I think we can really start making our way back up. So that will take a bit longer. Obviously, it's not the most ideal scenario unless you want to buy more or something like that, or, it's a little more of a risky scenario because yes, there's a possibility that what if we just come back down, retest it, and then just snap it and continue down. Always a possibility, right? That there is a risk towards that if that's the scenario that plays out. So personally, and this is what I personally favor right now, at least, I do expect this move up to continue. I don't think Tesla's going to drop too much farther down, right? I do think that ultimately we should continue this move up. But again, confirmation is a break at least above 195, ideally above 200. But that $5 price range, in my opinion, is the most important part to look at right now and to really pay attention to. But that's kind of the main thing I'm looking at. Don't forget, we did talk about the 3-drive pattern yesterday. If you haven't checked out that video, we talked about it there. Check it out, right? We have that massive 3-day pattern or 3-drive pattern where it just happens bam, 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 right? And you're constantly making lower lows, lower highs, which essentially is just making a massive bull flag. And technically, it's still a very real possibility. For instance, right, if you go over here, go to the weekly, it's a little cleaner, and you take the Fibonacci and go from the lows over here to the highs over here, we're pretty much bouncing exactly off of the 618 Fibonacci level as of right now. It's almost exactly on the money. So, you know, that's important to understand. That is still a potentially bullish catalyst. Now, obviously, there's some signs of concern here because we did break down below all these trend lines. Maybe this is going to be just a dead cat bounce and we just come up to, you know, maybe 215, 220, maybe even as high as 230, but that's just a dead cat bounce. We get rejected by the 200 moving average. We retest that breakdown on the trend lines and we just continue down even further. That is a very real possibility. And that's where I'll be looking at, you know, seeing just really how Tesla reacts in those scenarios. But I do expect us to at least get somewhere around that vicinity, you know, sometime within the next couple of weeks or so. Personally, we'll see, of course, if that holds true or not, but that's what I currently expect. And then from there, we'll, you know, of course, revisit it and determine what's next. But that's the main thing I'm looking at right now. One final thing I want to talk about very quickly, that's also just kind of interesting to note. Actually, two things is, of course, we have the 50-day moving average potentially crossing the 200-day moving average. To the downside, that is considered a death cross. It's considered a bearish pattern. But you know, there's been times in the past and on other stocks I've noticed where, yeah, it crossed and the stock just really couldn't care less. It just continued rising. It didn't matter, right? So, you know, it's not the only thing that matters. Like, yeah, it's technically one, you know, check mark for the bears potentially. But, you know, even if you look on Tesla back here, right, back when it initially crossed, which was all the way down over here, Tesla still rallied. And then it went sideways. And then it rallied substantially, pretty much going from this 220-ish range all the way up to 300, even though it crossed. Right? Even though the death cross happened, now granted Elon started selling and we did sell off substantially just not too long after that. But the point I'm trying to make is just because a death cross, let's say, does happen, it doesn't mean that Tesla has to start selling off aggressively right then and there. And this right here is a beautiful example of it. Like I said, cross happened. We still actually went up even more a few days after that. Then we just went sideways for, you know, quite a while here. Actually, it took about a month or so here, it looks like. And then we just rallied even higher, right? So just, you know, again, take that into consideration. It's not, you know, the end all be all sort of thing. And the final thing I want to talk about before the video is done is going to be this. Interesting thing is, let me go ahead and fix this up. I don't know what I'm doing here. Let me go ahead and go like this. Let me go ahead and fix this a little bit here. Beautiful. So the interesting thing here is the fact that, so if you notice that 3 drive pattern we talked about, how we're kind of in this massive channel going downwards, right? And we're constantly going zigzagging between the upper and bottom part of, you know, the two channels, if you will, the two, you know, trend lines, if you will, of the channel. Interesting thing is, if you take the measuring tool and essentially calculate the percentage of the drop from the high to the low on each of these, you know, zigzags, if you will, let's take a look at it. Take a look. It's pretty interesting. So that's the first one, right? We'll say, give or take. That's a little bit higher, actually. It started up here, and then we went down pretty much right here. 29%, we'll say, roughly, 29%. And then we rallied substantially from there. And then what happened? Well, we had another drawdown. So it started somewhere up here, and it went all the way down over here, about 30%. Cool. Let's see how much we've dropped so far, interestingly enough. To the low, not to where we are literally right now, obviously, to where the potential bottom is, let's say. We dropped so far about 31%. So that's just, you know, something to consider. Every single time we have been zigzagging, going up and down like this in this, you know, massive channel, every time we reached it, you know, now in hindsight, the top, and then we had that massive correction, all of which, by the way, have been, you know, not as steep as this, but pretty sharp for the most part, right? Definitely pretty aggressive sell-offs for the most part. They've all been, give or take, 30% sell-offs. Obviously, my arrows are not drawn to absolute perfection, just to give you a rough idea, of course, but about 30%, all 3 of them potentially. So just, you know, something to note here. That's pretty interesting in my opinion. So take that for what it's worth as well. But with all that being said and done, ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. And as usual, I'll see you tomorrow. Peace.